So good morning, good afternoon, and good evening, everyone. The webinar series on COVID-19 social protection responses on behalf of GIZ, and I'm working as an independent consultant in the field of social protection. The reason why you see me here today and not Silas Tyler as a moderator, or as announced yesterday, Selvin Chehoma as a moderator, is that Selvin is having some connection problems at the moment, and he was jumping in for Silas, who felt sick yesterday. So we had some very last minute changes, which was kind of a challenge for us, but we are very happy that we can now host this webinar and have a discussion. We also lost ILO on the very last minute. They were also previously announced as panelists here, but due to other urgent issues, we also couldn't get anyone from ILO at the moment for giving an input to fiscal space for social protection. But I hope that we can catch up on this topic later on and also have a separate maybe webinar on this or a separate discussion online on this topic. So I'm going to share my slides with you now. So this is the 8th webinar of the Social Protection Responses to COVID-19 webinar series. And as you all might know already, is that the series is a joint effort initiated by IPCIG, GIZ on behalf of the German Federal Ministry of Economic Development or Cooperation and the Australian Government Department of Foreign Affairs and Trade, DFAT, in collaboration with the socialprotection.org platform and in cooperation with partners from different organizations. The webinar series is part of an initiative with two other major components: a collaborative mapping of country news and documents disseminated weekly through a dedicated newsletter, as well as an online community on the topic to systematize information and foster discussion. You can all join this online community online and can learn more about the whole initiative and find out how to collaborate and keep updated on future webinars. I also have to announce one of the future webinars, which is taking place next week on Tuesday, 12th of May. It's about universal health coverage and coronavirus crisis challenges and responses, maintaining essential health services, and it will be hosted by UNICEF and other partners who are going to join. So also happy to register for this webinar and to join us next week as well. So I'm going to shortly introduce the panelists and the discussants of today's webinar. We have, first of all, and maybe Delphine can also switch on her camera, or has it switched on already. We have a panelist from IMF, Delphine Brady. She's economist at the Fiscal Affairs Department of the IMF, sorry, and is mostly working on expenditure policy issues with a focus on social spending and energy subsidies. She is a graduate from the École Normale Supérieure in Kashan and holds a doctorate from the Toulouse School of Economics in France. Then as a second panelist, or as a discussant, we have Mark Blecher he's the Chief Director of Health and Social Development of the National Treasury of South Africa. He holds a PhD in the area of health economics and a degree in community public health and public health from the University of Cape Town. So very happy to have you on board as well, Mark. I'm looking forward to the discussion. Then also from the National Treasury of South Africa, we have Lindy Nsankomo. She's a senior budget analyst in the Public Finance Division of the National Treasury of South Africa, and her main focus is on social assistance. She is mainly responsible, or her responsibilities include budget allocation, recommendations, and analysis, monitoring expenditure, and supporting sound social assistance policy development and costing. She is a graduate from the University of KwaZulu-Natal with honors in economics and plan to further study soon. So good luck with that, Lindy, as well. And yeah, this would have been our original moderator who, as I said, has some technical issues and could not join very last minute. So your moderator, as I said, it's me, Martina Bergthaler, social protection consultant, and here on behalf of GIZ, representing German Development Corporation. So I quickly and shortly want to give a let's say an overview how we are framing this whole webinar. I'm not sure if my slides are really showing up when I want them to show up. 1 minute, I just have to. Okay. I only have one. Yeah, I'm not sure.
Dear Martina, you know what? The slides were not going through when you were talking. Karina is controlling the slides now, so she will pass the slides for you.
Okay, yeah, I'm very sorry for that. These are the technical issues that are usually happening during these webinars all the time. Yeah, so Karina is going to share the slides for me now. Yeah, I think we can just continue here. So before I'm handing over to our panelists, I wanted to just give a short framing of the topic on social protection financing within this whole webinar series. And I want to build up on what was presented during the second webinar of this series and looking into what Valentina presented. So if we could have a look at the next slide, please. Yeah, so as we heard during the second webinars, there are two key features of shock responsive social protection systems, of social protection responses that we can give to a crisis like this, to the COVID-19 crisis, but also to other crises. One feature is system and program resilience, and the other feature is system and program adaptation. And I just want to give a quick, let's say, insight in what this actually means for social protection financing. So resilience is that countries have to make sure that the existing systems and programs won't collapse, which will require some changes to routine design and implementation. Whereas the term adaptation in this regard means that countries have to adapt their programs to cover changed contexts needs, either via existing or also via completely new programs that ideally build on existing systems. So how does this actually translate into social protection financing? When we have a look at the next slide, I'm going to first look into social protection financing with regard to system and program adaptation. So when we talk about social protection financing and system and program adaptation, the overall question would be what financing modalities are actually in place and how can they be extended to cover the extended benefits that we need, to cover the additional caseloads that we have to cover, and also the increased services that we want to provide to the affected population groups. So how can all this be financed? How can we find the fiscal space for that? And which financing options do we have? This would be the questions that we can frame when it comes to programs and systems adaptation. Whereas in the next slide, I'm going to shortly introduce what social protection financing means with regard to systems and programs resilience. You can go one slide back, please. Yeah. So here, systems and programs resilience, when we look into social protection financing, is more, let's say, the medium to long-term question. So when it comes to financing, the question is, how can we ensure that social protection programs financially withstand the shock to maintain routine delivery? Now during this crisis, of course, but also after the shock hit and after the crisis, also taking into account that our let's say state budget is going to decrease, and how can we ensure that there is still sufficient financing available for routine social protection programs. Plus also taking into account that we have an additional burden to programs and systems due to the long-term effects of the crisis on people's livelihoods. So this is actually translating into the main questions that we have for this webinar. So we could just show quickly the next slide. So our main guiding questions for this webinars were that, which financing mechanisms can be and are currently being used by countries to create fiscal space to flexibly extend social protection schemes and systems as a reaction to COVID-19 crisis. This is actually a question that we cannot answer fully during this webinar due to, let's say, our last minute changes, and due to that we don't have an expert on fiscal space for social protection available during this webinar, but happy also to discuss this in the Q&A and also then maybe during one of our next webinars. Then another question was, do we have the right instruments to address international financing needs, and how can the international community mobilize funding, in particular grants? And also, what are the lessons learned to future crises to ensure that financing is available for a rapid extension of social protection schemes and systems? And how can social protection financing be sustained beyond COVID-19 in low as well as in middle income countries? You can see in red here also one additional question which came up with regard to financing, which is there a role for disaster risk financing for social protection responses for similar crises in future? We see the potential to be discussed, that this could be discussed in a separate webinar. So after the webinar, you will also have the chance to answer a short questionnaire. And if you are interested in this particular topic, you can also give us a sign, and we can also plan a webinar on this topic. And we also have some expert already identified who would be available to talk about that. So that's it from my side. I would now hand over to Delphine, and she would give a short input on from the perspective of the IMS on social protection financing in the wake of COVID-19. Thanks very much. Delphine, the floor is yours.
Show screen. Can you see my screen?
Yes, I can see your screen, so I think everyone should be able to see your screen. You should have just to put it on presentation mode, I think.
Absolutely. So good morning, afternoon, evening, everyone. Thank you very much for the opportunity to speak and present during this webinar. Maybe as a background, the IMF has published last year a strategy on social spending, which covers education, health, and social protection system. And this strategy recognizes the importance of social protection system, which play in some contexts macro-critical role. And so this strategy it builds the pillar of the way the IMF is thinking right now. And it also acknowledges the need for deeper coordination among international organizations. So it's just to give you a little bit of background on the IMF thinking on this. The the talk will be organized in 3 topics. So the first topic, I'll be brief, but sets the scene before COVID-19 and illustrates the long-standing gaps in social protection systems, particularly in emerging and low-income countries. Then I will spend a little bit of time on the emergency patches that have been put in place to try and cover those gaps during the crisis. And then in the third part, I'll try to sketch what could be sustainable fixes that could emerge from these emergency patches down the road to build resilient social protection systems. So first, the long-standing patches gaps. Sorry. So Martina talked a little bit about the different dimensions with which we assess social protection systems. Here I'm focusing on the coverage of current programs that are in place in different types of countries, splitting into social insurance and social assistance. So what these graphs show, and that you're probably familiar with, is that coverage is not universal, particularly not from social insurance system, and particularly not in low-income, low-middle-income countries. It's especially problematic when you think about social assistance systems as well, so social safety net, with a very low coverage at the bottom of the income distribution. Sorry, can you see my screen still?
Yes, we can see your screen.
In a low-income country. So these are the coverage gap. I'm not going to enter other dimensions such as generosity, which play a huge role, but the gaps are there as well. And the gaps are also there mostly in low-income emerging economies. So what this second slide shows, so on the left-hand side, you have a table that shows functional classification of public spending. And what you can see is so that first of all, that fiscal policy matters for countries for countries' development. So that's kind of a given. What it also shows is that there are large gaps across country income groups in terms of social protection outlays, with a low-income country spending on average 1.6% of GDP on social protection, and advanced economies spending 13% on social protection. But what you can also see, which is in the blue box, is that these gaps in spending also exist in other key development and social sector areas, such as education, health, and other infrastructure that are crucial for development. I'm thinking about water, for instance, or transportation. So, and these other sectors are complementary to social protection. So it's not just that there are gaps in social protection systems, there are gaps in other social, key social spending sectors. And these gaps are actually quite important. We have been estimating them in the context of the Sustainable Development Goals, the SDGs, for selected sectors, health and education, and selected infrastructure. So the gaps are huge, and if you consider low-income developing countries in these sectors, these countries should be spending on average about 16%, 16% percentage points more of GDP if they want to achieve the SDG goals in these key sectors. And this is to be compared to some other estimates that have been produced in terms of financing gap of social protection system. I'm thinking about the ILO estimates of about 5 percentage points needed in low-income countries for basic
Okay, I'm just jumping in quickly. It seems that we lost Delphine. We are waiting for her to come back and hope that she will have a stable internet connection soon again. Okay, yeah, so just one issue that I anyway forgot before we started the presentation is also that at the right side of your screen, you're also seeing a chat bar, and it would be very good to, and I think some people already started to send in your questions, to send in your comments. We are going then also to discuss this afterwards in the Q&A session. So we will have time then also to answer your specific questions regarding the topic. Okay, so far there is no sign that Delphine is going to come back. I think I would suggest to, I'm very sorry for this. We can't do much about it. We also don't have anyone available to step in for her to give her presentation. I would maybe wait another minute before then maybe turning to our discussants if she's not showing up, and let first present then Mark and Lindy, and having their view from South Africa on the topic. Yeah, but I think it seems that she's not available at the moment. I'm very sorry for this. These are the technical issues that we have to face nowadays. So I would invite now Mark and Lindy, if you could also switch on your cameras. I'm seeing Mark already. I don't see Lindy yet. Yeah, hello. So yeah, this was would be good if you could also switch on your mic so that we can hear you. Thanks for your flexibility and thanks for joining this webinar. So yeah, the original view idea was to have your view after Delphine's presentation on a specific, let's say, yeah, your specific view, how you are facing the problem of financing social protection responses to COVID-19 now in South Africa, and what you are currently doing, which financing options you have, and also which challenges you are facing now to finance the immediate responses to this crisis, but also to finance, to sustain social protection financing beyond this crisis. So I would invite you now to talk first, and then we can see if Delphine hopefully comes back.
Has Delphine just not reappeared?
Sorry?
Has Delphine just not reappeared?
Yes, I can see her now as well. Delphine?
Yeah.
Okay, sorry, we lost you. We lost you like 5 minutes ago, maybe. I don't know when you realized it. So I would, okay.
Can you hear me now?
Yes, we can hear you. So I would then change of plans again, ask you, Delphine, to continue your presentation. We have seen your 4th slide already. So we lost you at the slide of social protection systems compete with other priority spending. So we could maybe continue with over scarce public resources, if that would be fine. Yeah.
Okay, sorry. So yeah, I had to reconnect. Can you see the slides right now? And am I on slide 6?
Yes, we can see your slides. We can hear you clearly now. I have no idea what the problem was before. Yeah, but I would then ask you to continue with your presentation. And sorry for the interruption.
So the idea of slide 6 is really competing gaps and competing gaps over scarce resources. With this figure showing that low-income countries and emerging markets are lagging behind in terms of tax to GDP ratio, with an average of 16 to 17% of GDP. And the main point is it will take time to raise additional resources through taxes. We estimate that 5% additional of GDP can be raised over the medium term, but it's a long process. So which means that covering the gaps existing in social protection and other key development sectors will take time. So we can think of a gradual process of universal coverage as the ultimate goal. And of course, to build consensus over the fact that you raise additional revenue, this should be mirrored by greater efficiency on the spending side. So it's not just about spending more, raising more to spend more, it's also to spend better. But the crisis puts, gives a new perspective on this story, I think. Because given the large gaps in social protection and the large needs, immediate needs in social protection coverage in all the countries in the world, we can say, countries are now in urgently covering these social protection gaps. So this slide and this figure shows the breakdown of social protection measures that have been implemented by 151 countries now and counting, to provide income support to the many who lost their jobs and lost their main source of income. So social assistance programs are dominating the response over social insurance and labor market programs. And among social assistance programs, cash is king, with 54% of social assistance program being cash transfers. And governments are also moving along all the dimensions of a social assistance and social insurance system. So it's not just the coverage that they are expanding, but sometimes it's the generosity of the benefit themselves, and it's also the duration of the benefit. So they are really governments are really acting across the board here to cover the pre-existing gaps that I talked about. And governments are also acting in creative ways, given those gaps, and given most of the time that they didn't know ex ante who need to be covered because they didn't bother to, or they didn't have the capacity, or they didn't have the fiscal space to just like put together information of who is in need and who would be in need in times of crisis. Governments are really thinking out of the box, and interactions and relationships are blurred, I would say, between social assistance and social insurance, for instance, because what became really important during this crisis is, for instance, to cover informal workers, who by definition are not covered by social insurance program. And there, it's not so much social insurance that steps in, but social assistance programs. So relationships are blurred. Relationships also between public and private in terms of providing income support in a timely manner is also changing, with governments relying on grassroots movement organization to just target people in need, people that they don't know about, they didn't know about before the crisis, because the social protection systems in place didn't cover them. And so governments are relying on mobile network operators, for instance, to target people that could be in need. So these are some interesting things going on in terms of response. In terms of additional fiscal outlays of these response, these are important. And I think this is one of the main messages of this slide. So these are important outlays, between 3 and 4 percentage points of GDP globally. And these additional fiscal outlays on social protection, they reflect pre-existing weaknesses, as we discussed, and also political choices. So I can talk, for instance, about so if you look at this little table that I put together, of course these numbers are prone to change, because they just correspond to what was announced as of April 23rd. But if you look at France, for instance, on the social protection side, it's doubled the additional outlay in health. And it's mostly wage subsidies through the subsidization of partial activity, not so much on social assistance. But in the US, the additional outlay for social protection also reflects long-standing gaps in coverage, and this is why they had to beef up unemployment insurance, etc., etc. So to talk a little bit about the financing of these additional outlays, I think the priority number one that has been recognized and talked over by my institution and many institutions, and also by the G20 creditors group. So the priority number one is really to accommodate additional health spending to fight the disease, and to rely on global coordination to help the poorest country with limited health capacity. And in this respect, the fund has almost tripled its catastrophe containment and relief trust, which is essentially grants to poorest country. Priority number two, I think, is really that the coverage of vulnerable household is a priority, even at the risk of increased linkages, right? So given that so many people were not covered by pre-existing systems, it's difficult for governments to make sure that they are covering people who need the most. but it shouldn't prevent governments to try and reach those vulnerable households, even if it means in the very short run some additional leakages that will be fixed down the road. And of course, not all additional fiscal outlays to provide social protection to more people are born equal. They are not born equal, because all the countries have a different starting point in many ways. Many emerging and developing countries face multiple shocks at the same time: the pandemic, worsening financing conditions, and weakness of demand, and for commodity exporters, lower commodity prices. So these, I think, specific country context should be taken into account. And I think Mark and Lindy will talk a bit about this, but the priority when you start from a weak fiscal position is to reprioritize expenditure. Of course, safeguarding the priority expenditure that are health and social protection. So in the two last slides, I would like to open a little bit the debate for what comes next, because in the first part I said that there were long-standing gaps and that it would be a long journey to fill those gaps. The COVID-19 puts governments in a place where the long journey should become a much shorter journey because they have to cover those gaps. But post-crisis, these patches need to be more sustainable, because what's done during crisis is needed, but it's usually not sustainable in the long run. So it doesn't mean that the things that are put in place right now are not the foundation for a sustainable and more adequate social protection system down the road. And I think what this crisis has really stressed, it's the large premium for governments that had the capacity to reach people and to reach people adequately. So it gave a huge premium to governments with the capacity to deliver income support, relying on basic infrastructure, which is reliable and universal ID identification system, some kind of financial inclusion, even if it's not universal at the individual level, but if it's quasi-universal at the household level, it's already something, and integrated with some kind of socioeconomic data. And here, countries are also proving really creative in finding ways to find people in need. I talked before about using mobile network operators' data on airtime consumption, which is what they do in Nigeria, for instance, to target people who are probably more vulnerable and who need income support in an emergency situation. So countries are putting in place those quick fixes to deliver. And I would say that in a crisis, and this goes back to the priority number 2 of the previous slides, perfection is probably the enemy of good enough. So, and governments know that, and they are doing the good enough right now. So as a last slide, I would like to insist on the fact that governments have shown real creativity and real timeliness in the response to provide income support. So they should build on this and improve upon the new capacity that they are building. It's not easy. There are mistakes and there are higher risks in trying to fill up the coverage gaps right now. but they are doing it, and improving on those quick built delivery systems should enable governments to better target and reduce leakages risks down the road once the crisis has phased out. And of course, what's really important is when fiscal constraints start kicking in, clawback strategies should be progressive. And I'm insisting on this because given the filling of the coverage gaps right now, and given pre-existing coverage gaps, it's going to require a strong strategy and a strong commitment from governments to claw back emergency response, but to also maintain a decent coverage of social protection in the future, built on sustainable fiscal strategy. And I will stop there. Thank you.
Okay. Thank you, Delphine. Thanks for this insightful presentation. I think there are a lot of key takeaways that we can have from this presentation. I found it particularly interesting that you showed that there is at the moment some blurring between non-contributory and contributory financing due to this crisis, and that governments become creative of how social protection responses are actually financed. Due to this pressure that governments actually have to safeguard livelihoods of their populations. Another interesting insight was also that you already built a connection to one topic that we are going to address most probably in another webinar of this series, which is identification and registration of beneficiaries of social protection responses in this crisis. And I think one of the main messages that we also can take as a key takeaway here is it's not only about raising more funding and spending more, but also to spend better and to reprioritize budgeting, and that it's also about political choices and not only available funding. So thanks a lot, Delphine, for this presentation. I would now hand over to our two discussants from South Africa. They are both working at the National Treasury of South Africa, so they have a lot of experience when it comes to social protection financing in a specific country context. And I think it was Lindy, you are going to start with your input, and then we also have Mark adding a little bit and giving some more input on current challenges and responses that you are implementing at the moment in the South African context in this crisis. So the floor is yours. Thank you.
Thank you. Okay, so my focus will be on COVID-19 responses in relation to social assistance in the form of social grants, which are unconditional cash transfers to those earning below predetermined income thresholds. So Mark will then expand on the other social protection measures and the financing of social protection in general. So in South Africa, soon after the start of the nationwide lockdown on the 27th of March, there were huge outcries from communities and households for food and other support as hunger set in most households that ordinarily survive through odd jobs, or what we call piece jobs in South Africa, in the informal sector. So government had to respond swiftly, and in the social grant space, we decided on some measures to cushion the poor households against the harsh impact of the lockdown and somewhat boost household consumption. So our measures are temporary. They're only for a period of 6 months. They build on existing programs and infrastructure to enable timely support. So the aim is largely to replace the income lost during lockdown, and mainly for informal workers. So the one measure we introduced is a top up to all of the existing grants For the child support grant, which is our biggest grant in terms of coverage, this is almost double the top-up amount. So this increases in the first month by 300 to all the children, and then in the next 5 months by 500 to all the caregivers. So this measure is easy to do given that the system already has the beneficiary details. So it was a matter of only adding to the individual monthly amounts. So the challenge is that with the child support grant, it is the largest in terms of coverage. So it has over 12.8 million beneficiaries. So due to the large volume and the limited resources we have, the top-up could only be extended to the household, which would be through the parent or the primary caregiver who collects on behalf of the child for 5 out of the 6 months, and to all the children in 1 month. So in the first month, while we wait for the State Social Security Agency to gear up its system, we're gonna provide the grant to what we have starting yesterday actually, to all the children, 300 Rand, and then in the next 5 months we then give it to the caregiver. So once the system can attach the grant, the top up to the caregiver, then that's what we'll do. This meant that in the first month it's the lower amount because it goes to all the children, and in the remaining months we give a higher amount because it's only to the caregivers, which are 7.2 million compared to the 12.8 million. So the other measure we adopted is an adaptation of our social relief of distress program, which is usually a food parcel over 3 months for households that are in distress. So they usually queues. So the recipients usually queue at SASSA offices, which is the Social Security Agency we use in South Africa. They usually queue in those offices for application for the program and for receipt of the food parcel. So recognizing that this was that we couldn't continue this practice in the midst of a pandemic where social distancing is important, we then had to shift to online and mobile applications. So, so for similar reasons of social distancing and managing the volumes, we had to shift to cash rather than the food parcels to also provide the household with the choice of using the money for more than just food, but for other household needs. So the cash is paid through banks and also through what we call e-wallets, mobile money transfer, to those individuals who have lost their income. So these should be individuals that are not receiving any other form of social grant. They should not be receiving any unemployment insurance funding. They should have household income of less than the national minimum wage. So these restrictions are meant to deal with the volume of applications given the limited resources. So it was important for us to set out the qualifying criteria upfront, because the challenge has been that we have no database of the targeted individuals, and thus have no mechanism a tight mechanism of verifying them among the many who are likely to apply. So we might be seeing anything between 3 to 15 million people if we don't tighten up the qualification criteria, and therefore making the benefit highly unaffordable. We do have some mechanism to try and limit the affordability issues, but that might have issues in terms of social unrest where we want to then stop the benefit when we've reached the maximum budget available. So those are the 2 measures. So in terms of budget, so this has increased the social grants budget by about 26% for the year. So we are needing to source another 50 billion, which is about $3 billion. In addition to the current budget we had allocated for the financial year, which is 187 billion. So the additional requirement is about almost 1% of GDP that we now need. And for the relief, social relief of distress program specifically, the budget will increase from the usual 500 million per annum, which usually covers about 500,000 applications. This will increase to about 4 billion to 13 billion, depending on whether we receive 3 million or 8 million applications. So this is a massive increase in this program. So yeah, so those were the measures we've put in place in terms of grants. Mark will now take over and speak to the financing of these social grant measures and other social protection measures we've got in place. Thank you.
Greetings, colleagues. Thank you very much for inviting us to share our experience with you. Both Lindy and myself are from the South African Ministry of Finance, the National Treasury. So just picking up from Lindy, so South Africa has a strong social assistance system, but with a very limited contributory social security system. So a strong pillar 1 and a strong private pillar 3, but a weak pillar 2, mainly unemployment insurance. We entered into this pandemic with a weak fiscal position. Our deficit was 6.8% of GDP. Our interests as a share of the total budget was rising from about 12% to 13%, and by the outer year of the MTF to 15% of government expenditure, which is quite a big share of government expenditure. Actually, interest expenditure will exceed both health and social expenditure. So big reliance on debt, which is becoming a problem. A decade of low growth following the global recession, and our ratings on debt having recently fallen below investment grade. But the COVID pandemic was seen as a black swan, a once-in-a-lifetime event, something that was an extremely serious threat to health and to income. And it's actually emerged that the threats to income are greater than those to health. The need to protect the population through the lockdown is been extremely pressing. Now, with the pandemic, not only does economic growth slow greatly, in our case, probably declining by up to 10% or more, but the tax stance has shifted very, very substantially to protect businesses from going under. And I'll go into that in a little bit of detail. So there's really unprecedented revenue shortfalls, something like between an 11% and a 27% decline in tax revenue this year at a time of higher expenditure needs. So all of this leading to large fiscal deficits, surpassing 10% of GDP. And this response can be managed if the lockdown is a relatively short duration. But if it extends for lengthy periods, we risk major worsening of unemployment, poverty, economic growth, revenue, and it's going to become more difficult to sustain. So Lindy talked about the 50 billion social assistance intervention, both increasing existing grants and repurposing some of the grants, like the kind of the caregiver grant she was describing, which is a 26% increase overall. But for these 6 months of the intervention, it's actually a 50% increase for this limited period. And she also talks about this new intervention of the new cash social relief of distress. But we've also put in interventions in other sectors. So for the employed in our Pillar 2 Unemployment Insurance Fund, 40 billion rand, what's called the TERS benefit, which has a floor at the level of the minimum wage has been put into place. We've also, through our tax policy, put in place an employment tax incentive for low-income workers and put in place a range of interventions to support small business. Some of those I'll talk to. And also a credit guarantee scheme of up to 200 billion rand via the banks to protect firms from going under and in that way worsening unemployment. Also through our competition authorities, interventions to avert price gouging, because a lot of basic commodities are rapidly rising in price. So our financing response overall was around 10% of GDP. That's across all sectors. And substantially based on deficit financing. I mentioned the deficit reaching 10% of GDP, around 130 billion through reprioritization between government departments. And for the first time, South Africa, which has very little experience in borrowing from international financing organizations like the New Development Bank, the World Bank, the IMF, the African Development Bank. For the first time, South Africa looking to borrow 95 billion rand to support some of these responses. Fortunately, through our Pillar 2 Unemployment Insurance Fund, we have very large surpluses there, and we were able to draw down around a 40 billion surplus in the Unemployment Insurance Fund. There were also some issues in the timing of our social grant payments, which allowed us a kind of 15 billion cash flow issue availability this year. Our weekly bond auctions have been affected, and our Reserve Bank has taken an accommodative monetary stance, including lowering interest rates. So the response that our Minister of Finance announced about a week ago now is around a 500 billion rand response. It includes the 50 billion support to vulnerable households for 6 months, 20 billion to the health sector, 20 billion to local government, this credit guarantee scheme, and a range of other interventions. And the sources of financing for this 500 billion, which is around 10% of GDP intervention, include reprioritization, 130 billion, borrowing from these multilateral finance institutions that I mentioned, around 95 billion, drawing on surpluses from our social security funds like the UIF with 40 billion there, but about 60 billion in total, and a number of other sources which I won't cover right now. On the tax side, we've, although the previous speaker talked about the need to increase tax to GDP ratio, the response from our tax authority very much has been actually to during this period, make it easier for businesses to try and survive this period of tremendous economic slowdown. So this putting in place of a tax subsidy to employees of up to 500 rand a month for the next 4 months for people earning under a certain income threshold, which will help about 4 million workers, costing about 15 billion rand. And quite a lot of provisions allowing businesses to delay tax through this period where there's a shutdown. For time reasons, I won't go into more detail on the tax responses, but there's a fairly large set of tax responses. Our tax authorities actually were very responsive, including this 15 billion employment tax incentive, which started off actually as a youth employment tax incentive. So that's been increased, but also widened. On fiscal policy, I mentioned that we're going to see a substantial widening of the deficit, substantially reduced revenue collections. Our president talking about a wartime budget. So this is a war which we have to fight against the pandemic, and I guess against widespread poverty linked to the lockdown. We've had to use a wide range of PFM instruments. We first thought we'd have to use unforeseen and unavoidable expenditure and adjustment budget. It turned out that would be far too slow. We had to mobilize environments, disaster funds using our disaster funding system, send a letter from the Minister of Finance to the Minister of Social Development outlining what additional funding could be spent. Section 16 of PFMA emergency funds. We are recrafting the budget and we'll table an early adjustment budget, substantial reprioritization, and all of this is happening at various levels of government. I'm not going to talk through the details of some of our SME, small and medium enterprise support there across many different sectors, including small shops in townships called spaza shops. I mentioned the large 40 billion TERS, UIF intervention, tourism relief funds, agriculture, small farmer support, quite a range of different interventions across different sectors. Coming towards the end now, some of the longer term lessons I think we're learning out of this. Firstly is the value of having accumulated savings. We had a several hundred billion surplus in our unemployment insurance fund, and we're now able to relatively easily draw down 40 billion of that surplus. We've had to, for the first time, start trying to focus on ways to target informal sector workers who were extremely vulnerable. And from the very first week of the lockdown started losing wages. We were actually too slow in getting to this group. Only after the first 3 weeks did we realize we had to put in place an intervention for this, which is partly why this 50 billion intervention has now been put in place. This part of the attempt to focus on caregivers of children was trying to get indirectly to these informal sector workers. We've learned lessons around new payment mechanisms for the unbanked, including around cash send and e-wallets, various electronic alternates to food parcels that Lindy talked about. In terms of the level of our child support granted previously was below the food poverty line in South Africa. Currently, we've now moved above that, and there's some lessons in that. This is the first time in our country we've given grants to unemployed adults. This is a special 6-month cash grant. So it's a new intervention for our middle income country, and something which we'll have to think about going forward is to perhaps prolong benefits through the UIF fund or other mechanisms. And also it's challenged us to deepen our electronic linkages between systems of our Social Security Agency, our tax authority, our unemployment insurance fund, and our student funding organization. So I think this is the last comment. In conclusion, our income protection emerged as a major challenge in the lockdown. Lindy and our section in the Ministry of Finance deals with health as well. The pressures of the lockdown have massively affected income, so that actually the cost of the social protection responses ended up being larger than the health response, about double to date. We've required multiple financial instruments to redirect funds rapidly. All of this has created serious challenges to growth and the fiscal position, but we've seen this as a black swan, a once-in-a-lifetime event, and we've used the whole range of financing instruments, including environments, reprioritization, deficit financing, loans from international organizations, tax deferment, and subsidies. All of this is still not yet stable. We're still seeing large queues for food parcels, even food rights. So very difficult situation on the ground, quite difficult to respond. Thank you very much.
Okay, thanks a lot for sharing the experience from South Africa. I think this was very insightful again and very practical. Yeah, so we've seen or we've heard from you the innovative measures that the South African government is currently taking to respond to this crisis. But we've also heard from you the challenges that you are now facing in terms of financing these options. But we've also seen some very practical insights how you are currently identifying additional sources for social protection funding, and also creatively identifying what can be done in this, as you call, wartime budget that you have to set up. So thanks a lot. I think this is also, there can be also some lessons learned for other countries and some very interesting insights for other countries how to deal with this crisis. And we have now roughly 30 minutes for questions and answers, and I've already seen that there were some questions coming in. So I would start to pick out like 2 or 3 questions that I'm going to give back to you as panelists, and I would give you then some time to answer them, and then we can see if we have time for another rounds of Q&A. So let me start with one first question. A minute. So one question that came in is the role of, let's say, it was from Marit Mengesha. She said that in her opinion, the big challenge to finance such kind of emergency is the absence in many low and middle income countries of emergency funds. And how can low and middle income countries immediately finance these responses? As I said, there is a webinar in the pipeline on emergency, on disaster risk financing. So maybe there might be some questions that can be answered there as well. And I think there was some experience from South Africa that has been shared already regarding emergency funds. But maybe the colleagues from South Africa can elaborate a little bit more on that. But also, Delphine, you are very welcome to share your insights on that. And the second question that I want to take back to the panelists is, I think we also already pointed a little bit on that, but maybe you can elaborate also a little bit more about the question if it is always about fiscal space or if it is also a question about political will. That is informed by solidarity and rights-based approaches. So maybe we can also see some different approaches from country to country regarding that question. Anything else? I think that's it for the moment. So let's start with these two questions, and feel free to give your insights. Also, to, if you don't have an answer, also to put additional questions to that. We also will have time to elaborate these questions, and then afterwards in the written Q&A session. So it should be a lively discussion. And yeah, I would invite you, Delphine, first to reply, and then also Lindy and Mark from the South African perspective.
Okay. So first on the social emergency funds, maybe I will let Lindy and Mark talk a little bit about this. I think this is from a country perspective, if I understand the question, not so much from an international perspective, right? So maybe Lindy and Mark can talk a little bit more about this. Then on the political side of financing and putting in place social protection systems, I mean, as anything else that is fiscal policy, this is also a political choice, and the fiscal policies reflect social preferences in countries, right? So I think what we can do as international organizations, for instance, on top of better coordinating among ourselves to provide the best quality support to countries, is maybe to help champion countries that have made the choice of building a strong social protection system that work. I think that is a way to make the case that social protection systems are worth investing in within a broad social spending strategy that includes education and health, which reinforce social protection system as well, because when you have healthy, well-educated people, it's easier to have social protection systems. So I think what we can do as international organization is champion countries on top of helping them implement their social protection strategy in a broad sense.
Okay, thank you, Delphine. So I would hand over to Lindy and Mark also to answer to the two questions, especially maybe you can also elaborate a little bit more on how South Africa used the emergency fund. But I think you already gave some insights on that as well.
Let me start on that. So firstly, it's really important for all countries to have some disaster and emergency funds, because I mean, I think all countries get disasters and emergencies. You know, these are things that are very unpredictable events like floods, all kinds of natural disasters. So it's really almost like a rule of public finance that a country should make PFM provisions for these things. So in our country, we do have a disaster system. I think it's organized through our provincial and local government department. And we used it for very early on in the response. The first thing we did actually was to allocate, using the disaster fund, around 466 million for personal protective equipment for health workers, because it was really important to protect health workers very early on in this. So we used the disaster funds for this, and we might continue to use the disaster funds in this year further. Now, the problem about the adjustment budget, which will be the main way where we completely retable the budget, is it takes quite long to go through the parliamentary process. So again, you know, one needs to have in one's PFM legislation in a country, and I think really most countries need to have this, is provisions to be able to make, for example, in our case, the Minister of Finance, to make emergency allocations prior to the adjustment budget. So we have it in our Public Finance Management Act, Section 16, and we have it in we have a kind of federalized, semi-federalized system. So at the provincial level, Section 25 emergency provisions. So, you know, we have a fairly well structured ability to intervene very rapidly for disasters and emergencies. not without problems, but there's a clear legal structure for this, which is useful. Just on the second question, I must say that our president has absolutely led the response to COVID from the front, and he basically shut the national borders very early on in the epidemic, as the cases were starting to spike in Europe, for example, and within a week of that, declared a full national lockdown. And he's been very strong on the health response and on the income protection response, to the extent that he personally announced this 50 billion income protection response. So the president has led very, very strongly on this issue. I think the only thing that we are really struggling with now, and I think many countries are struggling with this now, is that it seemed the obvious thing early on to shut down and to lock down. And so the entire country virtually went into lockdown. Now we found the effects on employment and the economy, even within 3 weeks, and then we extended 2 weeks to 5. By the end of the 5th week, I mean, the effects are enormous. Over 1 million jobs lost, and this growing all the time. Huge hunger in the streets. Small businesses collapsing rapidly. So trying to balance the economic effects and the health response has been really, really tricky to get that balance right. And we still sit very, very uncertain how to get that balance right. Because our epidemic, despite a 5-week full lockdown, what we now call a stage 5 lockdown, is still growing. Actually, our curve is still rising. So the problem is that people are progressively needing income protection and are extremely vulnerable. So that balance has been difficult to achieve. Thank you.
Okay, thanks for your detailed responses. I think we have time for another round of questions. So there were some additional questions coming in. One for Delphine was handed in by Flora Aninditya, and she asked if you could please share what strategies are currently taken by low-income countries to finance their health sector, and also maybe the social protection aspects of it. And do they rely on international loans or grants? So maybe you can share some of country experiences and responses from IMF, but also other international organizations. Then we have one question from Fabio Veras. He's interested to, the challenge is how new quasi-universal schemes and/or innovative and subsidized social insurance for informal workers can be set up during the recovery phase using the new debates quickly put together to target the missing middle, informal workers. The technology seems to be available, but how will these new programs be funded? What are the options that we have? Maybe related to this, we also have the question from Arindam Laha. He or she asks, as suggested by Delphine, universalization is the ultimate goal. Are you in favor of universal basic income scheme as a part of progressive universalism strategy? This would be, let's say, a question also in general, but also maybe from a South African perspective. So I would hand back these questions to all of you. Again, would ask first Delphine to give a reply to the questions that are directly addressed to her, but also to the other ones, and then would hand over to the colleagues from South Africa, and then we can see if there is still room for additional questions.
Thank you, Martina. On the first question on this financing strategy, so I'm not familiar with all the financing strategy by low-income countries, and as I said in the presentation, and I think as Lindy and Mark shared, it really much depends on the country context and the constraints that are in the country. The CCRT, what we call the CCRT, which is the Catastrophe Relief Trust, from the fund has been tripled to go to $1.4 billion. And this is used to provide liquidity and capacity, spending capacity on health, mostly on health response to countries. Haiti, for instance, which is a low-income country, has recently received some money, and many countries are tapping this facility. So, but I think, as Lindy and Mark said, it's going to be a financing mix, and they were really clear about this. It's going to require a financing mix, and I think countries are putting this together. On Fabio's question, I think he touches upon the point of formalization, and in a sense, can we use fixes and programs that are put in place or strengthened right now during the crisis to formalize the informal economy in a sense? How do we build on the databases that are currently put together, that are probably flawed and have weaknesses, but that are a start of knowing exactly the people that could be in need when there are income shocks? I'm not sure the crisis is the time to try and kill and achieve many goals with one instrument. There are ways to build on the current programs to down the road nudge people and inside them, encourage them to give information so that you have information on a greater coverage of information of your population. I think what is really important for governments is to maintain and strengthen the computing capacity and the data capacity that they are currently putting in place, probably also partnering with private companies. I always think of the mobile operators, but also with business organizations, informal business organizations in different sectors that are heavily hit, like the transportation sector, etc. This is something that can be built upon, computing capacity, data gathering capacity, and then help broaden the coverage of social protection. But then maybe there is a greater conversation to have, and this pertains, I think, to another question that was on the chat, which is the picture between social assistance and social insurance. That the picture I showed was a bit misleading because it was showing that the response was mostly social assistance. It's based on the World Bank Live paper that Ugo Gentilini is doing, and I think I have to commend their work. It's a really good piece of work. What shows is that countries may have social insurance programs in place. Those social insurance programs disappear as you go down the income ladder across countries. This was the that I showed. What this graph was showing is that in new responses or in additional strengthening of programs, countries currently are doing more on the social assistance side because it's easier for them, and because in many countries this is what exists. I think, Lindy, this is what you insist is also, that it's social assistance that is strengthened right now with different transfers. And I forgot. Universal basic income, universal transfers. I think this is a long. This is almost a historic debate. Universal transfer, or what I prefer to call them quasi-universal transfer, near-universal transfers, maybe a useful tool during this crisis I don't think that governments should shy away on principal grounds from quasi-universal transfers in terms of crisis, because as I said, the priority is to cover vulnerable households. What governments are trying to do when social insurance are in place or social assistance programs are in place is to bridge the actual delivery of income support with some quick responses. We've seen that in the US. It's not a low-income country, but they have put in place what they have called a universal transfer, which is not a universal transfer. They target it as much as they can on income ground, but it's quasi-universal. They are delivering a check, and as they do that, they also buy time for social insurance programs to kick in. They have had massive demand on unemployment benefits. It takes a toll on social administration, which is not always staffed adequately to answer this type of demand, of huge demand. And it has been the case in the UK, in the US. So I think quasi-universal rapid income support, when they can be done, are useful. And what we see in many low-income and emerging countries is new social assistance programs that are being developed precisely to cover the many informal workers that were not covered before. And it's not universal. It's near universal because of the large share of informality in these many countries. What matters is then how do you make this sustainable down the road? I think it's again the Fabio's question is how do you make that sustainable from a fiscal point of view, and how do you make that sustainable from an operational point of view? Because the data that you are collecting right now in an emergency case and that you are building your new programs on, maybe you can dwell and build the foundation of a stronger social system down the road. But you need to have in mind that this needs to be sustainable down the road. And maybe quasi-universality or categorical targeting through child benefit, as is done, for instance, in South Africa, is the way to go. But I think we shouldn't be shy of having this conversation, that's for sure. Over to you, Lindy and Mark.
Okay, I can speak to the issue on universalization and the basic income grant. So in our context in South Africa, given the limited resources and the huge inequality, for us it's not a priority at this point to universalize, because we've got high levels of poverty and inequality. So that's what we'll focus on targeting at the moment. And I think Mark can add on the other questions.
Okay, thank you. I just wanted to talk a little bit in linking to also a question asked by our colleague Jeremy Seekings on why it's taking so long to introduce the new 350 Rand grant in South Africa. And Jeremy, I've also read a really wonderful paper which was shared informally with me that you wrote on this. So you'd actually be the right person to answer this question. But just on resilience and adaptation. So, I mean, we have not a very strong social security agency, although it has about 9,000 staff. It's not a very strong institution, and it went through a period of about 2 or 3 years where it was using an organization called CPS to pay recipients. And when that contract ended, a crisis emerged in the system, and which eventually the Constitutional Court had to rule on extending the contracts, that the whole social grant payment system would not collapse. So it's not a very big, it's not a very strong, it's not a very resilient system. Now, this became worse in the pandemic. because with COVID, the personnel in the agency were too afraid effectively to come to work. So most of the personnel of the agency have been at home for several weeks. So the capacity of the agency is weakened. And on top of that, there was a concern. What happens in South Africa is social grants are paid on a particular day of the month historically, like the first of the month or something like that. And so one would get huge queues of recipients coming on that day. And what we found is that that was exposing a lot of elderly people to the COVID virus by standing in long queues for long periods, in even getting electronic payments in retail stores. And again, so what they did is in the context of this COVID epidemic, they split the payments to 2 or more times in the month. And the first time they did that was yesterday. But again, it was a resilience problem, and they made quite a lot of mistakes in the way the payment worked yesterday. So there's been a lot of complaints in our national media yesterday about, in essence, disasters around social grant payments yesterday, which is related to your question about resilience. Now, Jeremy's question pertains to the question of adaptation and putting in place the new systems. And again, with a weak organization, also with a potential population which could be as high as 20 to 30 million people, and a budget limit of 50 billion rand, I think both the department and the agency have been struggling to adapt rapidly enough. But nevertheless, and also to, of course, develop the new payment mechanisms, because the first time they're going to tools outside traditional bank payments. So that's a major, it's a major system change for them, as your own paper also talks about. So both of those resistance and adaptation issues are relevant. It's on informal sector workers. I think we have, through this epidemic, recognized that this is a weakness in our system. That's partly why we've had to use child and other grants almost as a proxy for trying to get to these workers. Hopefully, once the SASSA, after the epidemic, once the SASSA offices are open, the 9,000 staff come back to work, there's more potential for for the organization to know their clients better and build databases around these groups. We have although we have a strong social assistance system, we have long delays in putting in place a contributory social insurance system beyond our UIF. So that's also kind of a lesson that the importance that the UIF played in our context, and trying to put back on track some of those contributory systems. Let me stop there, I think. Thank you.
Okay, thanks, Mark. Yeah, I think we have 2 minutes left, so I would not take any additional questions anymore here. And I think we have answered almost all the questions that came up in the chat. I want to remind you that all the questions that have not been answered, they are going to, or at least we are going to try to answer them in the Q&A follow-up that you will find on socialprotection.org. And there will also be the opportunity to put additional questions to the panelists if you have more interest to discuss about the topic. So it's not just this webinar, but you also, beyond this webinar, you will have time to, you will have the opportunity to further discuss this. Yeah, I think I want to first of all thank our wonderful panelists for your presentations, for your contributions, and also for answering all these tricky questions. I think, yeah, there were some tough ones as well, and we are going to follow up on this in the Q&A, in the written Q&A session. I want also to thank all of our audience who followed this webinar until the very end. So thanks for your attention and thanks for all your questions. And yeah, before ending and before closing, I want to remind you that this was not the last webinar within this COVID-19 series. There is about something more to come. The next one, as already announced in the introduction, is about universal health coverage and the coronavirus crisis. So very happy to have you on board again next week on Tuesday. I think it's not sure if it is the same time, but roughly the same time as today. So please do not forget to register. And I also want to announce another webinar which is going to take place this week, which is also related to social protection financing. It's called Financing of Social Assistance in African Countries, and it's going to take place on May 7th. We have several participants from different organizations, and I think it's linking very nicely to this webinar. I guess they might also be focusing a little bit on what the COVID-19 crisis means for social protection financing in African countries and how to overcome the current bottlenecks. Yeah, so also please do not forget to register for this webinar. And I think this is it from my side. Thanks to all of you, and hope to see you again next time in this webinar series. Bye-bye.
Thank you. Thank you. Bye.
Thanks a lot.